Let's bring in Scott Bauer joining us this morning from Prosper Trading Academy. Scott, we've been talking about stocks on the move higher, near all-time highs. I want to broaden that discussion and bring commodities in, and basically because we've been also arguing for a while now that crude kind of contained at these levels right around 75, while not necessarily behind the move up in stocks, but very supportive of them at these new all-time highs.
There's no question about it, Ben. And I still contend that, there's probably a $5 or so premium in the price of crude due to, what's called geopolitical risk events, that if it weren't for that, the demand destruction that has been going on, especially coming out of China, that is really capping any gains that we're seeing, any potential breakout to the upside. And, in my opinion, God forbid there's an escalation in the Middle East. I see this containment in this price holding and really, quite frankly, a lot of pressure being on crude. And we may test the $70 area, and we could even see a 6 handle sooner rather than later if things calm down a little bit in the Mideast.
Yeah, Scott, I feel like we have seen a bit of expansion in terms of the involvement, right? Most recently, the U.S. becoming a bit more involved in terms of the situation in the Middle East, yet range-bound, contained price activity still, how a reflection, I guess, of how crude's had kind of a level-headed approach towards the situation, and also because we haven't seen really that disruption in supplies yet. I mean, tensions have built, but not necessarily flows.
No, exactly right. We haven't seen that. There's been some rhetoric coming out of Russia. We know what OPEC is doing. The market is comfortable or at least complacent with that. So you're right. There has not been a disruption. We're producing more oil than ever. So you take all those things into consideration, and if you were to take out the risk premium that I think is built in here, you're looking at a $70 or lower number, in my opinion.
Scott, I mean, that would be huge if we could see $5-6 come out of crude ultimately, because when you look at prices at the pump, one could argue that has been fueling this rally in stocks, right? Sentiment, confidence, and at 314, AAA reporting the national average across the U.S., I mean, that's down from where we were a year ago at 347. It's ever so slightly higher from where we were a month ago, but also a reflection, price at the pump, of what we've seen in terms of supplies and production here in the U.S.
There's no question. And, in trading, we always talk about these psychological numbers and big numbers. But I will tell you, the price at the pump, if that gets a 2 handle instead of a 3 handle all of a sudden here, that confidence out there, the consumer, all of a sudden, that's a big deal there. That's a really big deal. And I don't think that's out of the realm of possibility anytime too soon.
Especially, Scott, if we were to see employment conditions can remain strong, right? If we're all working and have jobs ultimately, and crude prices are lower, I mean, you'd see, especially into the summer, ultimately, you'd see spending or at least continuation of the patterns that we've been seeing where spending abound in many ways.
Where the consumer has just been incredibly resilient in the face of everything thrown at it. Absolutely, Ben, I agree.
Scott, talk to us a little bit about what's going on, because you mentioned China, and I want to talk a little bit about metals with you. And let's just begin with copper, because it's been very resilient, much like crude, range-bound, very contained, considering the events, considering some of the concerns associated with China and what we've seen as far as the U.S. dollar and rates.
Unbelievable. Let's take that all into consideration, where the dollar is and how strong it's been. And it's up a little bit this morning. But yes, you see that, and you see the continuation of rates and the cuts not happening. And then what's going on, with copper and what's going on with China. I would agree. Copper, it's certainly not breaking out anywhere, but it has not fallen apart, which to me is pretty incredible. I think that there's been 4 or 5 straight down days here. Looking up a little bit this morning here, but
but right at the 50-day moving average here.
Exactly. So it's holding right here. This is a very big area for it. And you know what? When we see this consolidation, and as you just pointed out, the 50-day, and it's kind of just hovering, right? Back and forth, and forth. That usually precipitates a pretty big move. I don't know if that move is going to be
one way
upwards
or the other,
or downwards.
Yeah,
exactly. But it has held in there. You're absolutely right.
Well, you can see that. I mean, a reflection of what you're talking about throughout 2021 into 2022, we were very much range bound around 460. look at the breakout, kind of like a pop bottle being shaken up, as we always describe it as, and then you get that high conviction move, you get that release, right, and then sideways consolidation here. So we're kind of right in the middle of the range. It'll be curious to see which way the scales tip, and we will look to China ultimately for a lead on that. Talk to me about gold, because speaking of hanging in there pretty well, with the dollar to New Year highs, I mean, to see gold just below 2050, one could argue another win for the bulls.
No doubt about it. And it was just a few weeks ago, people were talking not just 21, but maybe 2,200, with the hopes that rates were coming down. So given everything that's transpired with central banks over the last week, 10 days or so, yes, gold has held in there pretty well. We talked about that psychological barrier, that psychological number. 2,000 is a big one for gold. Is it, technically a big number? Probably not so much. But, if we do start to see gold breaking down, that 2,000 number could be real pivotal, real critical in what happens. But I would agree with you, given the macro environment with rates and the dollar, gold has hung in there pretty well.
That 2,000 level you just mentioned coincides. We'll take a look at this chart here, the 200-day moving average. It's the yellow orangish line on this chart here. You can see we're, much like copper, kind of teetering around the 50-day moving average, right around this 2043 level. Scott, in the last break block, we were talking about the dollar getting a little bit of a lift, a bid from geopolitical tensions in the Middle East. Crude, maybe not as much so, $5, $6 you said, but not necessarily to the point where we're going to see a breakout yet. But talk to me, because gold oftentimes is the beneficiary of those geopolitical tensions, and maybe that's what's helping it fare as well as it has versus the U.S. dollar.
Right, holding up, exactly. If that risk premium, again, wasn't there in gold, you might see those 2,000 levels. So there is probably a little bit of that built in there.
Okay, this gives us lots to watch here on the commodities front. Scott, appreciate you joining us to help us break it down here. Take a look at markets this morning. Scott Bauer, Prosper Trading Academy.